When I said richness is a state of mind, it is the ability to live life the way you want to.
There's no amount of, let's say, right investment.
I can't say saying that 10 points, I can't write saying that do this, you'll become rich. I've seen like many guys who are very intelligent, super intelligent, and have not made it big. But we are talking about 85 to 90% of Indian population is still only in bank fixed deposits. The concept of multi-family office or hiring experts to manage money is more in the new gen than in the traditional business families.
When you think of Mark Zuckerberg, Bill Gates, Oprah Winfrey, there is something common besides what you think is obvious. And that is the concept of a family office, an office that is dedicated to maintaining their wealth, to keeping that wealth, probably even growing it. There are just so many aspects. But to think of a family office is what we are going to be delving into this show, which is called Keeping Wealth Wise. I'm Vasanthi Hariprakash, and I have great pleasure in introducing our guest, who is one of the most renowned wealth advisors of the country. And let's just tell you a little bit more about him and Rajmohan Krishnan, principal founder, managing director of Entrust, someone who comes in with a deep understanding of the financial services industry. Raj, welcome to the show.
Thank you, Vasanthi. In fact, it's a pleasure to be here and talking to you.
Raj, you are someone who is, built wealth for some extraordinary people. And today I hope that experience, that wisdom is shared with those who are going to be viewing our show. But as you really look back at your career, at what you have done, what is the tripti or the satisfaction that you feel?
So, I would like to start this way. I want to make a small correction here. Though I identified myself as a wealth advisor much early in my career, but I've transcended that path and moved into a family office expert. So today, I would pride myself in calling myself as a family office expert. So let me start.
That correction is necessary.
Yeah.
Because really, when we look at it from a common person view, I would think that a family office is a wealth builder, advisor. You are the people who are really telling those who are HNIs, the high net worth individuals, about the wealth that have created. How is it going to be optimized? Isn't that true?
In a way, it is. But what happens is wealth is just not about money. Um, in a very literal sense, yes, wealth is, you relate wealth to how much of money you made. But with money, there comes a lot of hassles in a person's life. Over a period of time, they create complexities in life, and all of us do. Okay, I wouldn't want to say that in a particular way, but I think all of us, with money, you start accumulating, and that's
Right.
a basis of human life, right? So you start accumulating, and when you say accumulating, you accumulate real estate, you accumulate, maybe some people accumulate art, artifacts. Some people can go to the extent of what do you say, really finding themselves in terms of even in wealth, I would say, uh, diversifying too much, okay, is again called accumulation. Because like you really see, when you have money, there's some such scare saying that, hey, what happens
If I lose it.
if I lose it?
Yeah.
Okay, so that means that scare brings in a lot of what do you say, madness. Okay, you will act in a very very different way. Okay, and this holds good to everybody. Okay, it is like, and that is human psychology. Okay, and very few people have crossed that barrier and become like attained the stage of nirvana, meaning bliss. Okay, most of us are in this journey, meaning in terms of what do we do with this money, whether I should give it away or I should keep it with myself,
And how much
or
to
how
keep.
to grow, whether I need all of this. Okay, it is from somebody who's got very less money, meaning I'm talking about relatively, and to people who have got more money, more and more money, the philosophy and the ideas are the very much the same. It's no different.
So let me rewind and therefore ask you, what is the difference between being rich and being wealthy? Do you look at it as the same?
I wouldn't, because see, rich is a state of mind.
So you're saying that even a person who doesn't have much money but feels rich because he is able to spend it.
No, actually, it is, yeah, it is in a way, yes. But even otherwise, I would say that richness, when I said richness is a state of mind, it is the ability to live life the way you want to.
Okay.
So, wealth is a significator of your bank balance or your investments or your real estate. It's more material.
Okay.
Richness is what you think, okay, of yourself. Like, for example, somebody who will have very less money, okay, but still thinks he's rich because he's able to spend. He's able to spend the way he want to. He might still travel in a second class train, but that is what he needs.
Let's say when I feel rich, regardless of how much currency I have in hand in my bank account, I'm going to now take you through the question of what I see as challenges in this whole spectrum of richness, of money, of wealth. One is the creation of wealth itself. For people who are watching us, who probably are at this stage or probably at the cusp of growth in their lives and want to be actually rich in terms of their bank balance, one is, how do they even get there? if if you really want to be rich, as the saying goes, probably you have to be born rich. There are people who come from very humble beginnings. We hear the stories of people like a Dhirubhai Ambani who made it and then become this extraordinary stories. But then, by and large, it seems to be easy to be wealthy if you're already rich. There's a sort of a baseline rich. What are the challenges that you see of becoming rich from where you are for the average Indian?
It's not about challenge. I would deal with it very philosophically, because this, I always believe in one thing: money is very transient in nature. You don't own money. Everyone thinks saying that I own everything. It's not. It passes through generations. Like today, money is with you. Tomorrow, the money is with somebody else. Day after tomorrow, the money can go to somebody else. So you're just a custodian of the money. You don't own it. Just imagine tomorrow morning you pop off. What will happen to this money? Do you take it? No. So I feel, in a very philosophical sense, this being rich is not in your hands. You can do the basics right, meaning you can work hard, you can be intelligent in terms of doing the right things. You can set up a company, you can set up a business, you can join a great firm, but being rich or being wealthy is not in your hands. So I would say, saying that there's no recipe for being rich.
There's no amount of, let's say, right investment.
I can't say saying that 10 points, I can't write saying that do this, you'll become rich. Like I've seen like many guys who are very intelligent, super intelligent, and have not made it big.
So, in the Indian thought and philosophy, there is this concept of Lakshmi to bahut chanchal hoti hai. Even in Kannada, we say Lakshmi chanchal hai, and that ties in with what you're saying. This whole transient nature of money. So let's say from a point of wealth creation to then growth, you have already touched upon some parts of that, and then to protect, and then probably to transmit it. But then, if we are really coming into the thing of protection, isn't the family office, or in this case, the multi-family office, doing this for those who already have created wealth and are probably have already grown it to a certain extent? So, what is the difference, first of all, between a family office and a multi-family office, and what is it that you all do?
So family office is a kind of a loose arrangement. Okay, it's not an entity by itself. So anybody, any individual for that matter, let's take an example of a promoter of a company, and he builds wealth, and which is not a normal variety, meaning he has built exorbitant amount of money because he's been lucky, but he's been doing great business, he's been intelligent, all put together, he's made a quite a bit of money. Now what happens is he continues to work in this business. He continues to do whatever he wants to. So, but at the same time, he wants to protect this money and he wants to grow it in a very organic way. That means that he needs to have some trusted people, and and then a team of people, maybe a trusted person and a team of people to make this money grow and also do whatever he wants, meaning it could be anything for that matter. It could be further investments into different entities, or it could be buying some what is hard assets. It could be anything for that matter. So typically olden days, if you look at maybe about, even today there are what do you say, arrangements like this existing in some parts of the country, where you have this munim, okay, concept, where a trusted aide who will come and sit and who will manage the money and who will take care of it, and he's the most trusted man of the patriarch,
Right.
okay, or a matriarch, whoever it is, and they decide where the money is going to go and who's going to get the money at what time. Like for example, even the patriarch, when he wants money, he needs to ask him, saying that, hey, how much money I have, I need some money. He'll have to release that money. So that's
So
a
there's a
concept.
certain, yeah.
So slowly it grew. So as professionals started studying and like became experts of money management, these munims were replaced by these professionals. And there was a setup, there was an extension of the promoter's family that's called family office. Okay, and it's a kind of a, it's, so I know it started very very early globally, okay, in the US and UK and places like that, where Rockefeller was there, and Bessemer family office, many such very old families started in as early as 1850s and 1900s. Okay, they started even in Far East, like what do you say, countries like Japan. There are 4 generations of families who set up this family business and family office. So it's not something new. But of course, in India, all this started only in the last decade and a half, maybe about 20 years, and it's very early. Okay, and so what happens is, you ask this question saying that what is a family office and what is a multi-family office. So as I told, family office is an arrangement. So they have an extension of their family with professionals managing the entire affairs. Now, what is multi-family office is very different, meaning not everyone can afford to recruit, uh, hire people, and a team of people, a team of professionals, okay, to manage their money, because it needs deep pockets. Okay, like typically I would say, saying that you may need roughly about uh, anywhere between about 6 to 8 crores to run a single family office.
Right.
Yeah, which means that the salaries of people, and like there should be infrastructure for them, and also like you should give a carry when they perform well. So there's a lot of intricacies in it, and there are at the same time there are risks also. Like for example, people, what if they leave in between? You'll have the risk of rehiring some
Yeah,
of these people,
yeah.
and you may not get the right talent.
Yeah.
So it's kind of a retention becomes a huge issue. So it could be like high attrition and stuff like that. So what happened is, some families which are not there, meaning in terms of which can't afford
Yeah.
this kind of a money to spend, they depend on people like us. So we are multi-family office experts. So it's a shared family office.
So
Okay.
in the multifamily office, therefore, from the side, from the, if that's the demand side, and I look at the supply side now, that a family wealth office, the multifamily office that is, has to have a set of, or a team of people with specialist skill sets. Because if for instance real estate, or to have something in stock options, I mean there are so many different ways of building wealth. Therefore, it has to be within the team, the expertise.
So multi-family office is an institution by itself, because you deal with multiple families, and when you say multiple families, multiple requirements. So each family has got their own ways of managing their affairs. anything for that matter. Like, and that's why when I clarified when I say wealth advisor, wealth management becomes one portion of multifamily office. Okay, like typically there are families where they don't have liquidity because most of the liquidity will be in the business.
Right.
Okay, they'll be running a large enterprise, but they will over a period of time they would have like bought real estate which needs to be managed, and they'll be in the process of even buying more real estate. Okay, they'll be what do you say, buying jewelry. They'll be interested to buying artifacts. Okay, they need concierge, meaning there could be many such things which comes in. So there could be, so investment led family office is something, non investment led family office it could be both. So it need not be only investment based family office. So there will be families where there's no liquidity at all because most of the money is in the business.
So at Entrust, is there any focus among these two that you mentioned?
So you need to be prepared to handle any of these. So when you said saying that you need to have professionals, you need to have legal experts, you need to have financial experts, you need to have people who can handle concierge, you need to have investment experts. Okay, in even investment, it could be listed, it could be some of the unlisted, like for example, startups is name of the game in places like Bangalore,
Yeah.
and some of the places like Gurugram and places like that, where you need experts to understand unlisted investments. So a multi-family office is a kind of a congregation of experts. Okay, every aspect of what a family needs, you need to have an expert. And of course, you may not you can't be master of everything, right? Like typically you will have legal people, but still, can we give an opinion? Okay, like legal opinion, we can't because a law firm is required for that.
Yeah.
So typically we work with external experts.
So I'm also guessing, Raj, that there may be regional flavors in this. I was reading this book by Chinmay Tumbe, India Moving, in which he documents, it's a fascinating history that dates back to about 200 plus years of India's business communities. Let's say the Marwadis, the Chettiars, people from the Bora communities. And then there is a certain attitude that people from those families have towards wealth, and this is like from parampare, from traditionally, the way they think about wealth creation is must be so different from somebody who's, let's say, in the startup world right now is coming into wealth newly. So do you, as a multifamily office, have a different approach for some of these who come from very traditional backgrounds?
So in my experience, the concept of multifamily office or hiring experts to manage money is more in the new gen than in the traditional business families. Like, if you look at the third generation, okay, if you look at the grandfather who started the business, who would have accumulated wealth, who would have probably spread his wings, son who would have followed his father's footsteps, and the grandson today, he thinks differently. Okay,
Sure.
so he doesn't follow the same, what is a pattern of the grandfather and father. He would have gone abroad, studied, understood the concepts. Okay, he would want to professionalize the entire, not just the way money is being managed, even the business what they are running in. And they would like to de-risk. They would probably want to go to a new age business. So these are some of the things which are evolving. So we would, in our experience, the different types of clientele which a multifamily office has got are clearly professionals who made wealth by being CXOs and CEOs of companies.
Okay.
Number one. Number two are typical promoters of companies, entrepreneurs of companies who built companies. And at some point of time, they've made money, they've exited the business. They would have kind of got a kitty in terms of when they
Yeah.
exited. And the third type are these third generation legacy wealth business people who think differently. So our clients are not the typical legacy wealth clients because they would still like to hold money. They would like
Right.
to be close to the money, and they would not. It's not the question of don't want to. They trust them more than anybody else. Maybe
So,
rightfully so because they've got their experience. They would have built their money from nowhere. So psychologically, if you look at, maybe they are right, but things are changing. Okay, so the third generation has changed. Okay, that is where they become our clients.
So, let's take a scenario of a city or India's metros. Those who are watching us, if they are in a phase of their lives, let's say building institutions, building companies, which will probably be at a stage where they will be acquired, and then therefore with that will come big wealth. At what stage do you define or do you foresee or advise that they look at or consider a multifamily office for themselves? Is there like a cutoff?
So it's a very, very good question and a very pertinent question for this conversation. Uh, I believe that, and I keep advocating to people, the minute you set up a business or an enterprise, or you join a firm and you believe that you're going to do well, okay, and you're optimistic of doing well, you should start nibbling in. You should start engaging with people like us. What happens in most of the cases is people spread too thin. Like typically, like people come to me and saying that, hey, I know this guy, he's from this bank, he's from this institution, and they also come and saying that this product is good. Okay, it's a very, very product driven, very
Yeah. And
transactional
very
approach,
piecemeal.
very piecemeal approach. So most, even I have seen the most educated people, okay, people who've ran businesses, most of the times they fall into this what do you say, rut, in terms of they fall prey to this, all this, and over a period of time they diversify too much, and the realization comes much later, when maybe they're getting a little old, or maybe there's a scare, the health scare, something like that. They believe that, hey, what happens tomorrow if I'm not there? Okay, should I approach somebody so that there's a confidant who will probably transcend the wealth to my kids, my grandkids, or my wife who's not involved in this business? What she will do? She'll be struggling to manage all this, and it's spread over everywhere, and so it's a very, very different stuff, and that's why I keep telling, saying that family office, it is like, I'm just trying to find an example, saying that the minute you build a house, okay, or you buy a car, don't you think the RTO, the registrar office, says, hey, without insurance you can't get the car out of the house
Right.
or the showroom? The family office is like that. You should, and that's what we advocate to people. The minute you sense, saying that, yes, I'm setting up a business and this is going to do well, of course all of us are optimistic it's going to do well, and I will have to start nibbling in to begin trusting somebody and engaging, because it takes time. It's not overnight. I can't meet you and tomorrow morning I can't trust you with all the money. So when you nibble in, by the time you're there, you would have already established maybe 5 years, 10 years of relationship with somebody, and then it becomes very smooth transition into a kind of a multifamily office. So if you really ask me, in real sense, that's not the case. Where we It needs a lot of selling from our side. You'll have to go talk to them about the concept, keep telling them, saying that why do they need a multifamily office? Actually, it's a no-brainer, but yet there's a kind of a hard selling needs to be done to make people understand why it is important in their life.
I'm just thinking that if I am that person who needs for sure a multifamily office at this stage of my life, so I'm going to say, okay, who's the right fit for me? Who is the right office for me? Then probably what is the route I take? I might ask, I might go online. I might ask my friends because that is more trusted with the reference, the word of mouth. So, how do typically people land up with you? And what are the qualities that they are looking for that you fulfill?
So again, it's
Like
a
almost a tick box.
I agree. The most important characteristic of a family office is alignment of interest. Where do you earn your money? As a family office, where do I make money from? My money has to be the fees what the client pays. So I should be in the payroll of my client. If my payroll is from somebody else, then there's no alignment at all. That's the most important characteristic,
Right.
I would say. Like typically, and that's why when you said wealth advisor, I was a little taken aback because I come from that business, because my past is I've been wealth manager and I've moved to a kind of a family office expert. The reason for moving from a wealth management to a family office itself is because I felt as a wealth manager, I don't work for the client interest.
Whereas in the family office, the one of the biggest things is that you have earned their trust.
Not trust by saying that I'm trustworthy. I, First, I'll have to demonstrate the way I'm getting paid. If I am becoming an employee, like multifamily office is like an employee of the CXO of the client or a promoter, whoever you call it. So we are employees of yours. You pay us to take care of your interest. Whereas in a very traditional or a wealth management setup, you what you call a bank or an institution, bank has got a P&L to take care,
Right.
and quarter on quarter results and whatever it is, meaning in terms of they need to take care of their profitability. So who will make sure that we are profitable? Because of the fees what I make out of a client. So there's no alignment. So the premise in which a multi-family office or a family office setup comes into existence is because of this alignment of interest. And over a period of time, you become trustworthy, confident. It's a passage of time, because overnight, when I meet you tomorrow morning, you will not trust me with anything.
So there will be a point where probably what you, in the best interest of the client, have let's say advised, and something that due to market forces or any other factor doesn't turn out for the client to be what they are expecting. What typically happens in this scenario for you to either reassure them that this was long term or to earn back that confidence and your confidant position?
See, the most important thing is the intent. And as I told you, the fee structure. See, for example, if you're paying me and if you're working for you, and I advise you on an opportunity to invest, and if it doesn't turn out to be the way which was envisaged, very clearly, it's not something which I intended, saying that yes, I've given you this opportunity because I make more money or something like that. The intent is very clearly based on your risk profile, based on the way you wanted this investment to shape up. Okay, various consideration goes into before something comes into your portfolio. And if it doesn't turn out, it's not that we recognize this fact after 5 years. There's a very rigorous review process which happens with the client. And every month when there's a review, this gets discussed. And if it is not turning out the way it was envisaged, we cut it off. We just tell the client saying that it's a bad move. We'll move to something else. So the client fully understands, saying that yes, these guys are, what do you say, protecting my back. And so in every sense, we are working in your kind of a welfare.
Sure. However, let's say from a decade back to now, with changing trends in the world of finance itself, the new modes of approach, how do you yourself keep updated of the newer needs? We spoke about people who are newly coming into wealth, which is probably different from what a decade ago or something which you were managing wealth in a very like in a scenario where you were with Kotak. I mean, one of your most the best points of your career. So can you just say that in a personal journey, Raj, what is the how do you keep yourself and your team keeps itself updated with what's needed currently?
So, just to give you some, what is a little intro about my journey in this. Um, so, it's arguably, I would say, saying that um, I've been in this, what do you say, money business um, since 1992. Okay.
I see.
And I've seen how the business has evolved over the last 30, 35 years. And I've seen when a check of 1 or 2 lakhs was considered to be huge. Okay. And like we have celebrated when an investor actually gives a fixed deposit of 2 lakh rupees in a particular, what do you say, corporate company. And from there, then moving on to the influx of mutual funds. People didn't even understand anything. We had to hard sell to make them understand even the basic liquid fund. Even a liquid fund, people didn't understand. Saying
Got
that
it.
they said, saying that, hey, we don't want to kind of risk our money into this kind of a product. And it has taken a journey because we have updated ourselves. Like we learn, we read, okay, and constant updating our knowledge is very important for educating people. And typically, even today, though we are talking about financial, what is inclusion and people are investing, people know everything, but we are talking about 85 to 90% of Indian population is still only in bank fixed deposits. This all this what we are talking about is minuscule 5%. That's it. There are still people who don't move out of bank fixed deposits. So
Is it just a mindset issue?
it's a scare. It's like people. One is understanding. I don't have understanding. Anything where I don't understand, I don't want to. What do you say? Invest. The same thing we also follow in money management. The minute it's a very complicated product, we don't get into. We said saying that is not with something which we want to invest our clients' money in. It has to be simple, straightforward. So to take it,
So, for example, if one of your clients says that please invest my money in crypto,
we'll say no.
okay,
Very plain
If
and
they-
simple.
okay.
And though we have clients who come to us and saying that, hey, you're missing something, I said, please educate us. We would like to understand. I don't want to miss it, but I don't have an understanding at all about this. So anything which is complicated, which is not straight, is something which we avoid. So if you look at 90% of the population, they don't understand complicated investment. For them, even a mutual fund is complicated. So they're still in fixed deposits.
So when you see these ad campaigns,
Yeah.
you understand. I mean, I can connect the dots with what you're saying. I mean, they're trying to simplify it as much as possible. You see campaigns that says, "Oh, mutual fund sahi hai," like it's some of those very okay. We have distilled it for you. You don't need to bother much about it. But if this brings me to a very basic question, which is that if I have entrusted you with uh, let's say my wealth and the best interests of my wealth, do I have to give in all my wealth under your care, or is it that besides multi-family office um, jurisdiction, the person can also invest on his own elsewhere? So how do you make sure about this?
So that's okay. That's also a very important question. So what do you mean by multi-family office? The multi-family office means that the family office which you are engaging is an extension of your family. That means it's a literal extension of your family. They take care of your interest. They're aligned to you. They're your confidants. They are trusted people. They should know everything what you do. That is what in the real meaning. So if you start distributing to multiple people, then the meaning of family office just dissipates completely. Then it's not family office. Then you're one among the wealth managers.
But sorry about playing the devil's advocate. There are many people who would like to hide some part of their wealth. What you call the black money, what you call things that you probably don't even want your. So how do they deal with that?
So that is what is this we are talking about.
The wise wealth.
So we don't deal with those kind of people.
But you can probably make out when a person is not sharing some part of information.
No, I would say it's not it how you categorize clients is what is very important.
Okay.
Like typically, I don't want to go into much detail because you'll have to you'll have to take examples of that. It's better not to dwell in that area. I would say, in terms of your KYC, when you do meet clients, when you talk to them, when I say KYC, it's not about their paperwork. Discussions, actually, when you talk to people, the source of the wealth, uh, how do they manage their money, what is the kind of work what they do. uh, in a couple of discussions you will understand, saying that what this person is all about.
Okay.
Then only you deal with them. Okay, the minute you know, saying that, hey, this person is not straight and he's talking about uh, money outside the realm of the banking framework.
Exactly.
Anything outside the banking framework we don't touch, we don't go. Even when it comes to real assets, very clearly we say, saying that we talk only 100% check. The minute you say, saying that there's other components, then it's not in our purview. Because
That also probably de-risks the family offices themselves. Given sometimes you see many names that are wealthy but come under the scanner of
absolutely,
that.
absolutely, very, very clear in terms of whom do you want to service, whom do you want to deal with, and whom do you want, and who are the clients should be in your client list. It is something where you need to decide.